Hello everyone and welcome to Ticker.com's news channel on YouTube. On this channel we review stock markets, discuss financial news, market trends and economic data from Wall Street to Global Street. So let's dive in. We will begin our review of the U.S. economy with the latest updates on housing markets and retail sales. Existing home sales continue to decline, confirming housing market trends reported by recent releases. Existing home sales in September decreased 2% from August and dropped 15.4% from a year ago to a seasonally adjusted annual rate of 3.98 million homes. Rising mortgage rates and elevated home prices discourage first-time home buyers from seeking homes, and the share of first-time home buyers dropped to 27% from 29%. The number of home transactions dropped to a 13-year low, largely because of homeowners' low-interest mortgage rates struggle to justify new purchases. Home prices advanced for the third month in a row, confirming that demand for housing is still strong. The median existing home price for all housing types in September increased 2.8% to $394,300, and the prices rose in all four U.S. regions. A separate report from the government showed housing starts and permits fell in September, but completions rose from a year ago. Elevated interest rates continue to dampen demand for mortgage rates, and applications for mortgages declined 6.9% from the previous week in the week ending on October 13th. The data from Mortgage Bankers Association showed that the demand for housing loans fell to the lowest level since 1995, and applications for home loans refinancing plunged 9.9%. Retail and food services sales unadjusted for inflation rose 0.7% from the previous month and advanced 3.8% from the previous year in September from an upwardly revised 0.8% increase in August. The retail and food services sales are adjusted for seasonal and calendar changes, but not adjusted for price changes or inflation. Retail trade sales only were up 0.7% from August and up 3% above last year, and non-store retail sales were up 8.4%, and food services and drinking places sales were up 9.2% from a year ago respectively. Seasonally adjusted sales rose for the sixth month in a row on a monthly basis and advanced at the fastest pace in 7 months when measured on an annual basis. We now shift our attention to Europe. The euro area goods trade balance swung to a surplus of 6.7 billion euro in August from 54.4 billion deficit in the month a year ago. Exports declined 3.9% to 221.6 billion, and imports plunged 24.6% to 214.9 billion euros. In the first 8 months of the year, international trade deficit declined to 9.8 billion euro from 311.4 billion, and the surplus with the US rose to almost 100 billion euros from 98.3 billion euros in the corresponding period a year ago. New car registrations in the European Union increased 9.2% to 861,062 units, the European Automobiles Manufacturers Association reported Friday. New car registration increased for the 14th month in a row as supply chain disruptions eased. Passenger car registrations soared 22.7% from a year ago in Italy and jumped 10.7% in France, but declined 0.1% in Germany. Petrol-fueled passenger cars led the registrations, but market share decreased to 34.1% from 35.3% a year ago, followed by hybrid electric cars with 27.3% and battery-powered cars with 14.8% market share. Germany's producer price index fell at a record pace for the second month in a row in September, largely because of the higher price base a year ago, the Federal Statistics Office, or the Statis, reported Friday. Producer prices fell 14.7% in September from a year ago, following a 12.6% decline in August. The measure of wholesale price declined for the third month in a row, and prices fell at the fastest pace since record-keeping began in 1949. On a monthly basis, producer prices declined 0.2% after rising 0.3% in August. The UK inflation in September held steady at 6.7% after weaker food prices inflation was overshadowed by a rebound in transportation costs. The consumer price inflation held at 18-month low after food prices rose at 12.1% compared to 13.7% in August, and energy costs declined 0.2% compared to 3.2% fall in the previous month. Core inflation, which excludes volatile food and energy prices, eased to 6.1% and fell to the lowest level since January. Retail sales in the UK declined 0.9% in September from August, the Office for National Statistics reported Friday. The cost of living crisis combined with unusually warm weather dragged down non-food store sales by 1.9% in the month, including sales at furniture, jewelry, watches, apparel, and department stores. We now shift our attention to Asia. Japan's consumer price inflation in September eased to 3% from 3.2% in August and dropped to a one-year low, the Ministry of Internal Affairs and Communications reported. Core inflation eased to a 13-month low of 2.8% and stayed above the Bank of Japan's target rate of 2% for the 18th month in a row. China's economy expanded at 4.9% annual pace in the third quarter, slower than the 6.2% increase in the second quarter, the National Bureau of Statistics reported Tuesday. Economists were looking for the second quarter growth of 4.5%, and the faster-than-expected growth raised hopes that the second largest economy may achieve the government's annual growth target rate of 5%. China's retail sales rose at the fastest pace in 4 months in September by 5.5% after rising at 4.6% in the previous month, the statistical agency said in a separate report. India's wholesale price for the sixth month in a row in September, the Office of Economic Advisor reported Monday. India's wholesale price index decreased 0.3% from a year ago and fell at the slowest pace in the sequence after chemicals and chemical products, food products, and base metal prices eased. On a monthly basis, the wholesale price eased 0.6% in September following the downwardly revised 0.2% rise in August. Let us review key events of global financial markets this week. The yield on the 10-year U.S. Treasury crossed 5% for the first time since 2007 as investors recalibrated interest rate path expectations after comments from Federal Chairman Jerome Powell suggested higher rates are likely to stay through 2024. The S&P 500 index and the Nasdaq Composite dropped more than 3% on the worry that the Federal Reserve would keep interest rates higher through 2024. Gold rebounded for the second week in a row and advanced more than 2% on escalating tensions in the Middle East as investors sought safe haven assets. Crude oil extended gains for the second week in a row on the rising prospects of the Israel-Hamas conflict spilling over into a wider region in the Middle East. Natural gas prices in Europe edged slightly lower, but stayed elevated on the worries of a supply crunch in the weeks ahead and fell 8% in the U.S. on record output. Mild weather and a larger-than-expected storage build last week. European markets dropped more than 2.5% on interest rate uncertainties, and the crude oil prices rebound stoked worries about higher inflation. The euro held stable in the week, but currency faced headwinds after U.S. Treasury yields advanced. The yen struggled and hovered near its 11-month low level, and the currency traders worried that the government was more likely to intervene in the weeks ahead. Markets in China dropped 3.5% after property market woes overshadowed improving economic data. The S&P 500 index and the Nasdaq Composite dropped more than 2% on the worry that the Federal Reserve would keep interest rates higher through 2024. European markets dropped more than 2.5% on interest rate uncertainties, and the crude oil prices rebound stoked worries about higher inflation. Markets in China dropped 3.5% after property market woes overshadowed improving economic data. We now look at the corporate news of the week, covering key mergers and bankruptcy news. Wyndham Hotel and Resorts soared 10% after Choice Hotels International made a public offer to acquire the budget hotel chain operator. Choice offered $90 a share, $49.50 in cash, and 0.324 of its own stock, about a 30% premium to its closing price in the previous regular trading session. Choice decided to take its $7.8 billion offer directly to shareholders after merger talks between the two companies broke down after 6 months of discussions. Rite Aid, the drug retailer, filed for bankruptcy protection as the company struggled under the weight of hundreds of legal cases linked to opioid prescription. Let us review companies in the news this week following the release of quarterly earnings. Netflix soared after the video streaming platform operator reported sharply higher revenue and earnings growth and revised its annual free cash flow estimate to $6.5 billion. American Airlines Group reported record revenue in the third quarter and swung to a loss, and the airline said it achieved more than 70% of its goal of reducing its debt by $15 billion before the end of 2025. Las Vegas Sands said quarterly revenue rebounded, and the casino operator swung to a profit after Chinese tourists resumed traveling. The company also expanded stock repurchase plan. Procter & Gamble said revenues in its latest quarter increased largely because of a 1% decline in volume, but a 7% increase in prices. Goldman Sachs said quarterly revenues edged slightly lower, and net income plunged after the brokerage firm booked losses in its failed attempt to diversify into retail banking, and mergers, initial public offerings, and debt origination struggled in the rising interest rate environment. Lockheed Martin advanced after the company reiterated its full-year outlook and reported stable results in the third quarter. Let us review companies that led the decliners in this week after the release of earnings. Solar Edge Technologies plunged as much as 31% after the company lowered its third quarter revenue outlook, citing cancellations and deferrals in Europe. Solar Region's financial plunged 16% after the regional bank reported weaker than expected quarterly results and also forecasted a decline in net interest income in the fourth quarter. Net interest margin in the quarter rose to 3.73% from 3.53% a year ago, and net interest income is expected to decline 5% in the fourth quarter and fall 11% from a year ago in 2023. CSX, the railroad operator, said third quarter revenue declined 8% and net income plunged 24% after unit volume and revenue per unit volume fell. American Express reported its sixth quarter in a row of record revenue, but also hiked provision for delinquent accounts to $1.2 billion from $780 million a year ago. Tesla fell after the electric vehicle maker reported a sharp decline in its quarterly profits and weaker margins. United Airlines Holdings fell after the international airline forecasted weak performance in the current quarter, largely because of expensive fuel and flight cancellations to the Middle East. Morgan Stanley declined despite the financial services company reporting stable revenue, but investment banking revenues declined 27%, and asset inflows in the wealth management unit plunged. J.B. Hunt Transport Services said revenue in the third quarter declined because of a 14% and 22% fall in intermodal and truckload revenue, respectively. Looking ahead, we focus on earnings calendar next week, and investors are awaiting results from Microsoft, Meta, Amazon, Alphabet, 3M, Coca-Cola, and General Motors. About 700 companies are scheduled to release earnings next week in the U.S. alone. You can read daily U.S. and global financial market news, earnings calendar, stock movers, and economic updates on ticker.com and 123jump.com. You can also get latest financial books on redera.com and keep up with financial industry events on eventsinamerica.com. That's all this week, and we will see you next week again.